during the past 12 months, probably 15 months. We are realizing global production problems in many parts of the world, primarily in palm. The growth in world production already in 23-24, and in particular in the current season, is much lower than the demand. The global market is reducing stocks, prices are elevated, and this is very important, demand has responded. And we must be careful if we look at supply-demand that we are not overdoing, neglecting to what extent demand is suffering as a result of the high prices. We should not underestimate this. Coming back to the fundamentals, world production of the eight major vegetable oils will increase only by around 2 million tons in the current season for all the oils and fats. And if we consider the reduced carry-in stocks, the supply increase is marginal at only 0.5 million tons in the current season. Of course, this is not enough to satisfy world demand. Demand rationing is inevitable, and it is taking place. Now, the global market for the 8 vegetable oils, 221 million ton production, very, very slow growth. And you can also see from the slide, stocks are declining, and the stocks usage ratio is indeed very small at the end of the season at only 13.3%. This is bullish. The question, of course, is how much is this already discounted in the prices? And a lot of this is already discounted. The whole market, including animal fats, with palm the big elephant still. Despite the production problems, palm is the most important oil, and consumers in the world are dependent on palm, despite what you hear from the European Union. And the slowing down and the loss of potential palm oil production is of great concern to many consumers in the importing countries. Palm, the big elephant, with soybean oil. But what I want to show, first, please take a second and look at the significant growth over the past 30 years. Almost trebling of consumption. And if we look at the annual average growth, during the past 5 seasons, the average annual growth in total consumption for food, oleochemical, biofuels, everything, the total average annual growth, 5.9 million tons. This is the challenge. And this rate of expansion at the moment cannot be satisfied by the market. The challenge for the years ahead is to produce sufficient supplies in good quality at reasonable prices in a sustainable way. Yeah? The focus must be to raise yields owing to the limitations of land. But, and I think this is important, also area expansion in palm oil is needed. It has been a mistake, from my point of view, to place a moratorium on oil palm expansion 5 years ago. We see the results, some of the results now. The growth in palm oil production is insufficient and the side effects are tremendous, and I will cover this. The slowing down in oil palm expansion has dramatically increased oilseed production and cutting of forests, not only in South America, also in other countries. So I think this is something, I talked about this in Bali in November, and I just repeat this here. Acreage expansion is needed worldwide in oil palms. Current global situation, relatively ample stocks of oilseeds. Stocks usage ratio is relatively high, also at the end of the season, particularly in soybeans, but the oils and fats stocks usage ratio is flat. Prices have moved up. We have to be aware that due to the fundamentals, the global market has moved prices into a new range. Now, we don't know what the new range is going to be, but my suggestion, probably around in the range of 900 to 1,100, probably a little bit higher, but no longer the old range between 500 and 700 US dollars. Now, just briefly review what has happened over the past 12 months. December, prices in December 24 as compared to a year ago. Indonesian palm oil increased during this 12 months period by 50%. 50%. An unprecedented decline in Indonesian production and exports, particularly exports. Appreciating prices also of lauric oils, particularly lauric oils, rising further. Now coconut oil takes the lead because of the production problems in the Philippines. Palm kernel oil following at a distance, wide premium, rising premium between palm kernel oil and palm oil. I think this is going to stay for the rest of this year. Now, I want to focus on the perspective of the importing countries, and I look at the exports, world export development in palm oil. Exports in a growing market, and we talked about annual average growth in demand of 6 million tons over the past 5 years, average annual growth. In this environment, world exports of palm oil plummeted by 7 million tons from the peak in 2019 to 2024. Very alarming, very alarming. And continue to decline October, December, January, February will also be down, still down from a year ago. For the full season, 24-25, probably a stagnation. We expect a recovery in palm oil exports, but limited recovery in April, September. Look at the summary of the world palm oil balance. We see no growth, 48 million tons world exports compared with 56 million tons 5 years ago. And the stocks usage ratio in palm is relatively low. Stocks at the moment are tight, probably with the exception of Indonesia, where we see that stocks have recovered. This is not yet reflected in rising exports, but stocks in Indonesia have recovered, but in the rest of the world, very low stocks. palm oil is still the dominant vegetable oil. It is by far outpacing, look here at the blue line, the exports, is far outpacing the combined exports of soya oil, rapeseed oil, and sunflower oil. Why do I say this? Why do I say this? At the moment, there is a big shift to soybean oil, driven by price discounts of soybean oil or price premiums of palm oil, which we have seen now for an unprecedented long period of more than 12 months. Soybean oil and sunflower oil are not able to replace palm oil, only temporarily. And the question is, when will be the time at which South American soya oil exports can no longer increase? Well, those who ship this, they know that at the moment, if you bring a ship to South America, to Argentina, it's not easy to fill it because soybean oil stocks at the moment in Argentina are very low because of the huge exports in preceding weeks. Yeah? So we have to ask ourselves, how long can soybean oil stay at a discount to palm oil? We are seeing a big shift in demand, but this shift is temporary, and this will be corrected by the market. Sun oil supplies, export supplies are already running out, at least for the next couple of months, until the new crop comes. Soybean oil, the new big soybean crop is now coming, but it will be difficult to raise soybean crushings very much to satisfy soybean oil demand, which is currently created by the price discounts. So the price relationships are going to change. Yeah? So let's talk about the big challenges in the palm oil sector. Malaysian production flat, actually declining from the peak in 2019. Acreage declining, total area and mature area in Malaysia declining in 5 consecutive years. And Indonesia slowing down. Now we are not sure about the reasons, all the reasons for the setback in Indonesian production last year. We assume that production plummeted by 3.0 million tons in Indonesia to 45.5 million for crude palm oil last year. But this probably is still a little bit too high. Probably the decline was a bit stronger. We expect a recovery now shaping up from last year, particularly in April, September. There seem to be signs of a recovery now, but I think the most of the recovery will be from April onward, and our tentative estimate is that for the calendar year, Indonesian production will rise by about 2 million tons. This may turn out a bit optimistic. We have to see. But yields will be recovering. The question now is, are there any other structural problems, diseases, aging of palm trees, which may limit the recovery? So we have to watch. The yield decline, we are talking about the alarming decline in yields every year. We talk about the reasons, we talk about the need of replanting. We have now seen some recovery in Malaysian yields, but the main challenges are still, and the main problems are still unresolved. And this is of great concern. This is of great concern to consumers in the importing countries, because yields are far below potential. And we see this, the successful plantations have more than double the yields of the rest of the country. Lack of replanting. Only 114,000 hectares replanted last year. It should have been 300 or 320. The same 2023, 22. So, according to our information, about 1.5 million hectares of mature area in Malaysia is older than 19 years. No wonder that diseases like ganoderma are getting an accelerating problem, because the risk of trees being infected by ganoderma is higher if the trees are older. This replanting is a very, very important subject, which should be enforced with much greater strength than in the past couple of years. Otherwise, yields will continue to stay low, production costs will continue to rise, making the palm industry less competitive relative to oilseed producers. Insufficient supplies of high-quality certified seedlings. The labor issue, rising costs, also rising costs for sustainability and certification schemes. Now, this productivity is an important issue. We should not ignore this. It's labor intensive, 1 to 9. Much more labor intensive than canola production or rapeseed production or sunflower seed production in the rest of the world. And for the oilseeds, we have seen sizable yield increases of 2%, 3% on average per year over the past couple of years. So the productivity advantage of palm is slowing. Another issue, and this is in the slide here, look at the development of the mature area. Back in 2017, 2018, the average, in the years 2017 and 2018, the increase in the mature area was 1.5 million hectares, 1.6 million hectares. But lack of new plantings have reduced the growth in the world mature area to 300,000 hectares. This is another important reason for the slowing down of the world palm production. Yeah? Therefore, this issue must be put on the table again. And in my opinion, we need a reassessment. In my opinion, we need an opening of land, particularly in Indonesia, where new plantings can take place in a sustainable way, where area is earmarked which is economically non-sensitive, so that it can be used for palm within the sustainability criteria. And the final point I want to make is rising disease pressure. Silently, apparently, the increasing spreading of the ganoderma fungus is another reason for a slowing down of the yields. It's another reason for poor performance in yields in several parts of the country. According to my information, the infestation with ganoderma fungus has accelerated. And some people I talk to say that the area infected probably has reached double-digit rates, more than 10%, which is very critical. While the area in palm, and I now look at the last 5 years, while the area in palm has been increased worldwide by only 2 million hectares cumulative in the past 5 years, oilseed, and I look here at the 6 major oilseeds, oilseed plantings have increased dramatically by 29 million hectares, out of which soybeans alone by 20 million hectares, which means 4 million hectares on average expansion every year. This is a result of the slowing down of the palm oil production growth, of the declining world palm oil exports, which raised the prices, which stimulated plantings of oilseeds, particularly of high oil-yielding oilseeds where this is possible, but there are many countries where rapeseed and sunflower seed cannot be produced on a large scale, so it's also soybeans. And this is what we are seeing, have seen more and more. Palm oil is partly replaced in the importing countries by sun, rape, and soybean oil. But this is at a cost. This is at a cost, and this is also at an environmental cost. We have to be aware of this. We have to look at this as a global spectrum. Therefore, I don't think it's wise to keep the palm oil area unchanged. No. Palm oil is such an important crop with such high yields which you can produce here in this part of the world, where production should be expanded, ideally with higher yields, but we have to be realistic. Raising the yield is a very, very long-term program. And it would be much appreciated by everybody if the yield breakthrough can be reached, and replanting and quality and fertilizer and all the challenges are being met and the yields rise, but this is not going to happen overnight. And this is something which takes 5 years, 10 years, probably longer. And we should think short-term about revising the targets for acreage expansion. Now, I'm not finished with this story. In the latest 5 years, and you know, palm oil production growth in 5 years accumulative was only 2.1 million tons. This is nothing. This is nothing from the perspective of the global market, particularly if producing countries consume more and more of their own production domestically. This 2.1 million ton expansion compares with an expansion of 17 million tons in the preceding 5 years. So just realize the change which has occurred, the slowing down which has occurred, which is dramatic. Yeah? And this is mainly in Malaysia, where we even have a decline of 0.2%. Average annual growth is minus 0.2%, and the slowing down in Indonesia, only 3.8% annual growth over the past 10 years. Yeah, while other products, like soybean oil, sunflower oil, much bigger increase in production. Yeah? So palm oil is losing market share considerably. And until 2030, we optimistically expect the growth in world palm oil production to be 1.3 million tons. Optimistically. This is probably too high, but it compares with an average annual growth of 2.9 million tons in the preceding 10 years. Yeah? Palm oil is still the dominating oil, and the advantages are great, but the competitive situation of the palm oil industry has deteriorated. Yeah? And this is reflected in the price. 4,700 ringgit. Yeah? Can it stay at this level? I don't think so. I don't think so. Why? Because we are getting demand responses, and secondly, we are getting responses from other commodities. World soybean production has increased from record to record to record. This season is the season with the third consecutive global production surplus in soybeans, although we have lost production. We have lost some of the crops in the US from earlier expectations, as well as in Brazil and Argentina. But it is still a record crop, and although crushings are increasing sharply, world soybean stocks, as you can see on the slide in blue, world soybean stocks will be at a new record high at the end of this season. Yeah? Even if we assume an increase in crushings by 23 million tons, probably it's 24, probably 25. Doesn't make much difference when it comes to soybean oil. It's 18%. But it creates a surplus in meat. Still, with this big increase which is happening, which is triggered by the market forces, soybean oil production and exports are insufficient to offset the losses of other vegetable oils. Sun, rape production, low crops in Europe, in the Black Sea region, in Russia, Ukraine, in Turkey, a good crop in Argentina coming now, but overall much lower crushings, and as a result of that, reduced sun oil production and exports, also rape oils. Most of the decline in sun oil is taking place from now on, from February onward until September. So this is still ahead, and this explains why sunflower oil prices have appreciated, while sunflower prices now have a premium over palm. Soya oil, yeah, record expansion, 4.2 million ton increase in production, and a big jump in exports, but still the global market is in short supply. High volatility in prices. In blue, palm oil at a premium over soybean oil. Still, we have seen some appreciation in prices in all vegetable oils over the past 2 weeks. Soybean oil in Argentina at the beginning of this week still at a discount, at a sizable discount to Indonesia. Now at these prices, Indonesian producers have become more active sellers. And I'm sure you have seen this, it's sailed in the market. Indonesian exports or selling has picked up. Stocks are relatively high, higher than last year. And at these prices, I expect that palm oil stocks will continue to rise if demand is not picking up, and at these prices, consumers are still preferring soybean oil. Stocks should be picking up once production starts rising seasonally and above a year ago. I don't think that the palm premiums will persist in the April-June quarter over soybean oil. Now, what has happened in India? We have not seen this before. Indian monthly consumption of palm has fallen below the combined consumption of soybean oil and sunflower oil. We did not think that this is possible, but the price elasticity of the Indian market is so high that this actually happened. And we calculate the palm oil consumption at 700 or 680,000 tons in January. It is probably less than 600 in March, probably even 550. Stocks are very low, but imports have remained low again this month, while soybean oil imports are moving from record to record. Still, supplies are still available, shipments are continuing. March, April, we will again see big imports of soybean oil. Palm oil recovering because of stocks are too low. They cannot fall much lower, but still below a year ago. So we have to look at India, what happens there. The price elasticity is very high, and the Indian buying will contribute to a very large extent to remove the premium of palm over soya. And this probably happens first by raising the soybean oil price, and later by a setback in palm oil. It's interesting to see that the market share of palm oil in India has been on a declining trend for quite a while, but the decline accelerated this year. Soya oil, sun oil rising. Now, we may still be a bit too pessimistic in our import estimate for soybean oil for India of 4.9 million tons. Yeah. But very clear, you see this in the quarterly numbers, very clear, a shift from palm into soya and even sun. It was surprising to see that sun oil, despite the shortage in sun for the whole season, sun oil prices were attractively enough for October, December to take away palm oil market share in India. But of course, this was only October, December. Now we are in a short period, short situation for soybean oil. Okay, so I think I have to finish up here. Biodiesel. First, the premium of biodiesel over gas oil is huge. Has dropped a little bit, but it's huge. Second, what is happening with the mandates? What is happening with actual demand? I think we have to be very careful and should not translate the mandates into our supply and demand balances. At these price spreads, I don't think that the mandates will be fulfilled. And I believe, or Oilworld estimates at the moment suggest that world production of biodiesel and HVO will decline this year and not increase by 3 million tons or 4 million tons. So this is a very important factor we have to consider, and we have to make our opinion. You know, what is happening? So look at the annual growth rates in world production. On average of the 4 years, probably 4.5 million tons. 4 million ton increase every year. At the moment we assume it's a decline of 0.5 million tons, not an increase. This could be a game changer in a tight global situation, that the actual consumption of oils and fats, palm oil, soybean oil, rapeseed oil, animal fats, turns out lower than it should, because we work with the mandates. We don't believe that the Indonesian B40 will be fulfilled. We don't think so, despite all the announcements. We do it. I don't think so. It doesn't work. And if 50% is subsidized, it's 50%. No? So even our production estimate for Indonesia of 13.2 million tons may be too high, because this assumes B37. Probably it's less. Yeah. And then Indonesia has more export supply of palm, which helps in the tight situation we have. Brazil has already announced that the 1% increase originally targeted for March will not happen. They are concerned about domestic prices. And this is something which we should keep in mind. The mandates are mandates. And if governments are getting concerned about food inflation, it's an easy way, it's a relatively easy way to reduce the mandate, to keep domestic prices and to keep consumer protests under control. Or it's in other countries. So Brazil, very little growth. There will be higher total diesel consumption in Brazil also because of the higher crop. So we still think we see some increase in biodiesel, but not much. Not 8.4 or 8.5, only 8.1. US, big game changer also. Biodiesel HVO production down sharply in January, February, in the first quarter. The big question is, will the mandates be fulfilled? Who is paying for it? What about the subsidies? Will the US government probably raise ethanol, E15, which, if the mandates stay unchanged, would reduce the consumption of biodiesel and HVO. So we have to put this, we have to consider this as possibilities. Big question mark in the US. I think the risk is higher for a lower total production than for a higher. So probably we end up, probably in July, August, September, we are more confident that biodiesel production actually turns out lower than we assume. But the message today, from our point of view, we should be careful. We are probably not, most likely not seeing an increase in biodiesel, but a decline which has a very important price impact if what we are used to, further growth will not happen. Yeah? So, summing up, concluding, we are in a global production deficit of vegetable oils despite record soybean oil output and in a tight supply situation. Supplies are tight. Reduced opening stocks at the beginning of the season and very slow growth in production. Until August, we expect significant improvements in plantings of sunflowers this spring, and with normal weather we should see sunflower seed production rebounding, rapeseed production rebounding, and this should result in a better supply situation for the soft oils next season. And even if we get reductions in soybean plantings, very likely in the US this spring, and very little growth in soybean plantings in Brazil and Argentina, if any, for the 2026 crop. We may get, even if we get a setback, a decline in world production of soybeans. Supplies will be sufficient to further boost soybean crushings due to the large stocks in 25-26. Stocks are declining in the second consecutive year, supporting vegetable oil prices in general. The decline will be most pronounced in sunflower oil. Many importing countries are now cutting back their sunflower oil stocks as much as possible because they can refill, or they hope that they can refill their pipeline when the new crop has become available. For palm oil, we see some recovery. As I already said this, we think, we assume that Indonesian palm oil stocks will start rising, has already started rising, and will continue to rise in coming months above the year-ago level. World stocks probably up slightly at the end of the season. Stocks usage ratio declining. This is quite critical, those consumers who have a short cover at the moment, of course, are exposed to greater risks in case of supply interruptions. Uncertainties remain high. Reserve stocks are low. And stocks as a cushion, well, this cushion is relatively small. So implies higher risks. We continue to have weather risks as usual, of course, and we could have price volatility, considerable price volatility in case of weather problems. Yeah? Bearish outlook for oil meals, very clearly. The concentration of soybean crushings due to the shortage in palm, in sun, and in rape creates a big incentive, good margins, a big incentive for expanding soybean crushings, but this implies a bearish meal situation. We are all aware of this. We see this in the prices, meal prices under pressure. We don't think that we have seen the lows in meal yet. Soybean meal has more downward potential. Look at the soybean meal price range we have seen in 2024 going down below $300 in 2025. So some concluding statements. High prices have already accomplished demand rationing. We have to be aware of this. Second, in Indonesia and Central America, palm oil production declined very sharply in 2024. Trees have rested, the yield potential is now rising for this year. Decline in Malaysia could be quite significant. World production in the current season, in my opinion, rising moderately 1.1 million tons. This is not enough. This is not enough. I think I'm clear. I have been clear. Global sunflower and rapeseed oil supplies will be tight in the next couple of months. Sun oil is likely to become the price leader upward and push up soybean oil, fueled by demand shifts from palm. World palm oil import demand is weak. Price premiums are seen diminishing when stocks start accumulating in Indonesia. Many geopolitical, economic, as well as supply and demand uncertainties. Be careful with your cover. Don't allow it to become too low. Price volatility should be with us in coming months and years, but I think all the four oils will fluctuate in a relatively narrow range. In the years ahead, efforts must intensify to reverse the negative yield and production trend in palm. Very important. We talk about it for the last 4 years, if not longer. The challenges must be taken up. But even if replantings are accelerated and if new areas are identified for oil palm plantings, it will take 3 to 4 years until it will be reflected in higher palm oil production. Until then, palm oil market share will decline, oilseed plantings and production will continue to rise sharply. Whatever we do now, it will hardly raise palm oil production in the next 3 years, if not 4 years. So we are pessimistic on the production outlook for palm until 2028, if not 9. But we hope that the trend can be reversed towards better global production prospects for the years after 2030. In my opinion, the bullish fundamentals are already discounted in the current palm oil prices. There is some downward potential from current prices, some. Not very much, because we have to refill stocks. I expect sun oil prices to appreciate with rapeseed oil and soy oil following, and the premiums of palm to diminish within the next 1 to 3 months. And finally, Lorix, high volatility, Coconut oil prices have rallied since December on the back of much lower Philippine production and export supplies. I don't think that this is going to change for the rest of this year. The outlook, our models indicate low Philippine production and exports. And this should keep coconut oil prices well supported. Now, how big can the premium be to palm kernel oil? We were surprised to see the premium at $280. I don't think it can be much bigger. So the strength in coconut oil is shifting, is moving up. Also the palm kernel oil price. I think we're seeing a widening between palm kernel oil and palm oil prices. So with this, I've finished my presentation. Thank you for your attention.
Thank you very much, Mr. Milton. And with that, we move on to paper 2, the Global Vegetable Oil Market, Pakistan Perspective. Return to the Chief Executive.